Hi everyone, hope you're all doing well, and today we're going to talk about one of my favourite companies that I own, and it announced some really surprising news. Like when this news actually came out, I was like, before I actually start celebrating, I'm just going to check this is actually legit because I didn't really see this move coming, but it did turn out it was legit, and we were kind of talking about it on the Discord. It's probably one of our favourite stocks to talk about on the Discord, and if you do want to join that and the Patreon, the link is in the description. We have the Discord on there with 600 members, as well as 2 exclusive videos there a week on there as well, which is pretty amazing. If you do want to start buying some shares in this, there's some links to some brokers in the description as well. But the stock that announced a very surprising stock split was Inmode, one of my favourite companies and definitely the best performing stock in my stock market portfolio this year. It has done absolutely fantastic. It's currently up at $142. It had a pretty decent day on Friday after announcing the stock split. At one point it was up like 5%, but as it opened up it did drop and give it all back and then started to go on a bit more of a rally. But this is a company that I've owned for a while. I've kind of owned this company from about $33. So yeah, if I go up here you can see I'm about 320% up on this company right now, and I've had this company for over a year, and yeah, it's done absolutely fantastic. And the crazy thing about this sort of company is it's the only company that I think I have ever averaged up on when I've been up on a company or a stock over 100%. You know, it's a fantastic company, and like I said, at one point I was up over, I think it was like 130% on this company, and it had a bit of a dip. I think it had about 15% pullback, and I averaged up, and I don't normally do that. A lot of you guys know I do really hate averaging up, so it showed you, like, even though I was up 100% on this one, to still average up shows how bullish I still am on this one. And you can see now it's starting to get to a bit of a more decent market cap size. It's currently a $5 billion company, and the crazy thing about this company is that it's currently still trading at 47p, which is quite cheap considering. I think if we just go on to Yahoo Finance now, you'll see here that the trailing P is 47, the forward P is 40, and you can see the amount of profit they're starting to put in here. If you look at the EPS, 327, a year ago EPS 211, which is absolutely amazing. You look at the revenue growth as well, you can see here 52% revenue growth that it's going to do this year, and look at this, analysts are only predicting 18% revenue growth next year, which I don't know, I think they can beat that. And if you look at analysts actually that are currently following this stock, is they have this as 2 have it as a strong buy and 3 have it as a buy. And this company's absolutely been smashing it out the park with financials, very good profit growth as you can see, revenue growth growing at a huge amount. You know, to get a profitable company and a profitable company as well growing at 52% revenue growth, very fantastic. And this is why the share price has done so well over the last kind of year. Obviously I'm up 300% on this one, and even now I still think, like, sure, it wasn't as cheap as when I started buying it, but now realistically it's still at a 47p ratio. Is it overvalued? No. Is it as cheap? No, but it's still fairly valued, which is the crazy thing. You know, even though it's been on a good run here with the growth it has, it's still actually a pretty fair valued stock at the moment. But the shock news that did happen is they did announce a stock split. So they announced a 2-for-1 stock split. So basically any shares that you have, you will be now getting 2 shares for that 1 share that you do own. Now, it's a very strange one, is stock splits at the moment. You don't really see them too much. One of the big things why stock splits used to happen is because if you imagine maybe 10 years ago, even longer than that, but if a share price carried on going up and up and up, the shares get more expensive. You know, it goes $100, maybe $500, $1,000. Them shares go more and more expensive. Now, if you go back to a few years ago, what was the big difference is that you would have to pay to basically have any trades that you want to you buy. You would have to pay a bit of a fee for them and to sell them, and as well, that on top is that you would have to pay for whole shares. So if you're a bit more of a smaller investor, back then fractional shares did not exist as well. So when you add in the cost of every time you want to buy a share, sell a share, and that share would be quite expensive, it made quite a bit of sense really for the shareholder or the company to kind of make their shares cheaper. And nowadays we don't see them too much because of the technology advances that we've had with brokers, but they are still happening, and they certainly have got a bit more popular recently. I'm sure you've seen a few of them recently that have happened with Tesla. I'm sure you've seen them with Apple and Nvidia recently as well. Now, really the strange thing about what happened with them stock splits is that the actual companies actually rallied before the stock split and then after the stock split as well. So even though the stock splits don't really do anything, because all you're doing is splitting the amount of shares outstanding up, and basically that will have no effect on what you own realistically or the long run. It just basically it depends how many ways you want to separate that stock. But basically, the value of the company stays the same and the amount of shares you own is the exact same thing. And the only thing is to make them shares cheaper for you to buy, really. But the really crazy thing is recently, these sort of actions have sent the shares, the stock prices, to go on a crazy run. I don't know if it just creates excitement, even though fundamentally it doesn't change anything with the company. So seeing this news, you're kind of thinking, well, Inmode potentially in the next few months and the few months after the stock split, is people going to go, oh, that company was originally $142 and now it's going to go down to $71. People think, oh, it's a lot cheaper now, I'm going to buy it. But I do also think it is a bullish sign about doing a stock split, because I do think it kind of makes people more aware of your stock. It gets talked about. People think about maybe buying the company, maybe not heard of the company. And also it suggests that if your company has done very well on the share price side of it, well, maybe you might want to consider buying it because it has been a very good performer. And we know how people do get in the wrong mindset in the stock market of rather than thinking, oh, that stock's gone up a lot, maybe it's just a bit overvalued, to like, oh, FOMO, I'm missing out here, I want to go buy that one. And yeah, overall, like I said, it doesn't really change the company anything at all, but it does just seem to create a bit of hype. So coming up in the next few months, or even after the stock split when it does get to $70, we could potentially see this going a pretty good run. And one thing what will be very interesting with this company going forward is Inmode at the moment have been absolutely smashing it out of the park with their earnings. They've been so strong. Normally Q2 and Q3 is a little bit weak because it gets to the summer period, people go away a bit more. But the big thing is travel isn't happening. So you'd seen this recently with Inmode. Inmode actually brought out really good Q2 results, and last year they brought out Q3 results and they were really strong. And we might see the same in Q3 this time around. Now what Inmode do have is a history of really smashing earnings. So what they do is to come out and say, look, we're going to smash earnings, this is our new guidance. So it'd be very interesting, because what might happen is if they are smashing earnings again, they could come out and report preliminary earnings, which could see the stock price do very well. And just to kind of go off what happened last year, is they actually brought preliminary earnings out for Q3 in October the 13th. So if we go on to the stock split here, you'll see that the stock split will take place on September the 30th, and the stock will trade on a post-split basis on October the 1st. So that would actually tie in to do, the excitement of the stock split, and then potentially as well is 2 weeks later is if they smash earnings again, which is potentially could happen because obviously they do it quite often. Not saying it's guaranteed, this is kind of me speculating a little bit, but there's a chance they go out and smash Q3, and if they were to kind of bring it out around the same sort of time, it would be about 2 weeks after this split as well, which could also cause a bit of a rally. So yeah, very exciting times for Inmode. So I guess really, even though the company's really been on a very good run, I mean, just look at that chart, it's absolutely amazing. With the hype that is building there, that if they do a stock split, that creates excitement, even though it shouldn't really do because it doesn't change the company at all. People just get excited by it and start buying. So you kind of got that building on in the background, but also the big thing is if they do come out and smash Q3, that could also send the stock a bit higher. Now, like I said, that isn't a given, but if that does happen, we could, in my opinion, if that was the perfect situation, I mean, we could even see Inmode start touching $200 by the end of the year. Obviously on a stock split basis, that would obviously be $100 by the end of the year. But overall, kind of my overall thoughts is that, sitting on an average of about $33-ish, up 320%, I'm just happy to hold, because I think it's a company that's absolutely fantastic, absolutely smashing it. Even though it's been on a good run, I still don't think it's crazy overvalued. I just think it was massively undervalued when I started buying this company. And when it comes to any plans to kind of sell my Inmode shares, none at all, because like I say, it's probably I think it's my third biggest position in the stock market portfolio. It was my biggest until Tattoo Chef and DraftKings came along. But yeah, Inmode's still my third biggest position in the stock market portfolio at the moment, and even though I'm up over 300% in it and it's been my best performing stock this year, no plans to sell this stock at all, because I think, in the next kind of 5 years, where do I see the company going? I just see them carry on smashing it, how they are doing, management executing how they're doing, and they're very good at doing it. I think overall that potentially, obviously I started buying this, around June time, May time, last year, is when I still think in the next kind of 2 to 5 years, will this stock be higher? Yes, because if they carry on growing at the rate they are doing and the profit they are doing, that valuation is just going to keep dropping. More people are going to come in, people are going to be more excited. I think Wall Street are trying to realise or waking up to how good this company is, and yeah, it could be easily a 10 billion to even higher than that in the next kind of 5 years. So yeah, from my point of view, like when it comes to selling it, I've got no plans. I'm just happy to hold it still for the next kind of 2 to 5 years because they're smashing it. And generally, I think this will be this has the potential to be a 10x in my portfolio, which is absolutely amazing because, like I say, you only to be successful in the stock market, you can take a couple of losses, maybe some, average stocks, or get a couple of stocks that make 100% return. But if you have a stock market portfolio and one of those just takes one of those stocks to go up 10x in the next kind of 5-10 years, you're going to outperform the market. And I think Inmode is that stock for me. I think it is one of those stocks that I just hold, I get a 10x on, and will just help me to carry on bringing in some good returns in the portfolio. And yeah, it's just one of my favorite companies in the stock market portfolio, and I still think it's a good valuation overall. So yeah, I mean, it even comes to the point of view that if Inmode was to even take a bit of a dip, I'd even consider maybe averaging up again on this one. So yeah, really good news with the stock split, I guess. Didn't see it happening, especially when it's only $142. Normally it's a lot higher amount than that, and normally it's more than a 2-for-1 split overall. But surprising, but I think it kind of leaves us in a good position for the rest of the year. So yeah, it'd be really interesting to see how it goes. And congratulations to all you Inmode shareholders. Let me know if you are one in the comment section as always. But if the video was useful, hit like button. If you're new, subscribe, and I'll see you in the next video.